Good morning, traders. This is Matt with Newbie-Trader.com, and in honor of the Super Bowl being in Houston this week, I thought I would go ahead and talk about some black gold, better known as Texas tea, or probably even better known as crude oil. So anyway, what you're looking at, this is a weekly chart of crude oil with our opening gaps, high probability gap range plotted. That's the vertical green bars you see there, and then the horizontal red and green levels. Those are key buy, key sell levels that we give to our members prior to the market open each day. And you can see crude had a nice move throughout the week. If you look over here on Monday for the open, it was around 53.08, and over here on Friday on the close, it closed at the 53.81. So if you look at the entire week, crude moved up 73 ticks, or the equivalent of $730 per contract. Well, the beauty of it is, as intraday traders, we're looking, excuse me, we're looking to capture these moves intraday, and although it only moves 73 ticks for the entire week from open to close, look at all these rotations that it did intraday, and more importantly, in between our levels. I'm going to go ahead and zoom in here, and let's take a look at Tuesday. You can see Tuesday we started off, the market was low, came up through one of our levels pre-market, and then around the 9 o'clock open on crude, did a little bit of chop back and forth, opened outside of the high probability gap range, still went down and filled the whole gap from the previous day. See how it came down, filled the half gap, bounced to the tick off the full gap, and then kind of chopped into the close. And then you had this nice rotation up here in the morning. So what I want to do is go ahead and zoom in and then look at how we use that information, and then apply what we would call our signal tools, or our ultimate fractal tool, to that. Now the beauty of it is, no matter how your system or style of trading is, whether you already have a system that you use, that's great. These daily levels are still valuable to you, and it can tell you where the market is likely to pivot. So for instance, if you're looking at mid-morning and you see the market come up into this reversal zone, coming out of that, you would want to be looking at opportunities to get short and play back towards the daily pivot zone. So if you have your own signals or trigger entry method, then you can use that and focus mainly on the short side. And that's exactly what we do. So let's go ahead and take a look at some of our charts for the week. So this is what we call our 4 NT Renko chart, and basically I refer to it a lot as a campaign. With this chart, we're only looking at the initial signal in each direction, and you can trade off this chart, and we obviously have some traders that do. But what we use this for mainly is to set up what direction are we focusing on for that particular campaign. So you can start about 6 o'clock is when things get active over here in crude oil. The official opens at 9, but about 6 o'clock things start getting pretty active, and we have traders that go ahead and get involved starting early morning. And you can see at 6 o'clock or prior to 6 o'clock, our signal is to the upside. So during this entire 6 o'clock period up until 10 o'clock period, we would be in what would be considered a long campaign, and we'd only be focusing on longs on the shorter term time frame. Then starting, somewhere around 10 o'clock, probably 10:05, we're in a signal short, and so we would start a short campaign, pretty short-lived. Around 10:35, the market switches back to the upside. We're in a long campaign from 10:35 up until about 11:30. A little bit of chop here from 11:30 to, that only looks like about 12 o'clock, or not, maybe not even that long. You get a short, long period, and then finally a short period starting in the afternoon down into the 2 o'clock close. So from this intermediate chart, again, we're still plotting those levels. You can plot them on any chart you want, but you can see, okay, coming off 6 o'clock, we're kind of in buy mode. Now we'd expect some resistance, because although this was a key buy area in the overnight session, it's where you would expect some support to be, or resistance. Once support is broken to the downside, it becomes resistance. So it's resistance until which point it's broken, then it becomes support. The the beige color or tan color, whatever you want to refer that to, khaki maybe, that is a pivot, meaning you expect that to be kind of a little more choppy, an area where volume hangs out, and you can see on the profile it actually did, and then they go up into the first resistance band and sell off. So you start off with a long campaign, rotate for a short campaign, long campaign, short campaign, long campaign, short campaign. So that's on the longer term time frame. And so what we do is we jump down into the shorter time frame and go ahead and trade that. And on this particular chart, I've gone ahead and marked the valid signals. And we call it a valid signal when you first come above the moving average, until which point you get stopped out. And then after you're stopped out, if you pull back into a current active fractal or a moving average, you can enter the next signal. Now, each one of these additional signals would be an additive trade, and there are signals that you notice in here that I don't have circled. The reason I don't have those circles, is where you can actually add on to a position. So for instance, if you look at this trade that's taken place around 8 o'clock, you can see we have a official signal entry because the market pulled back after being stopped out of the previous signal. The previous signal we got 10 ticks on. It pulled back, was stopped out, reset under the fractal, so it makes it a good, valid signal. And then you could add to the signal. I would call that an aggressive add. You're adding to a position because you can see here our trailing stop is still following the market up. And again, this is all programmed. These stops are programmed. These entries are programmed. They show up on your chart if you have our fractal tool. And you can see we had a very active day on this particular day. As it went up, there was a lot of first contract off, stop out for break even. First contract off, stop out for small loss. First contract off, break even, stop on the second. Here you got a little extra 10, 29. Here was a good trail for 34. You can see the trail came up, and we're not talking about adding to the position. Had a nice little loss here, contained, but it was a full loss. Both contracts lost 5 ticks for a total of 10 tick loss here on the left. Small little chop winner. Again, so what you do, a lot of these trades, you get your first position off, you might break even on the second, but when you catch a good runner like this 35 tick runner here that got stopped out when the market reversed, it really pays to have that second position there. And a lot of times that second position does exactly that. It gets stopped out for a break even, and then you can see as we came down, cut a huge trade to the downside going into the close, and then after 2 o'clock you kind of, we come down and get stopped out and we don't do anything more. So on this particular day, again, playing those rotations, there was 175 ticks available, which would be the equivalent of $1,750 on crude. Now, obviously you're not going to catch every tick. You're going to have some slippage. You're going to have some mistakes where you don't get the entry quite right. You're going to have to pay commission. So I'm by no means saying you're going to collect $1,750. Some people may get more if you're adding, but what we're saying is there was 175 ticks available by using our tools from the signal entry to the trailing stop for this particular day in crude following our basic rule set. And if you remember, 175 ticks for just this one day, and for the entire week from open to close, remember I told you there was only 73 ticks. So that's why we do intraday trading. That's why we use a structure. So hopefully you can understand what we do with the multi-time frame. This was just a peek inside crude oil, and that's because giving some shout out to the Super Bowl and them being in Houston, Texas. Thought we'd talk about crude today. So anyway, hope you have a great weekend. If you want to learn anything more about this, at the end of the video, you'll see some links where you can get some trials. We're taking a totally different philosophy in our style of education and trading. We're not charging you up front to get in. We'd let you come in, see these tools, use them, and just pay a monthly service with no contract. And if you like it, we hope you stay around and stick with us for a long time. So anyway, this is Matt with Newbie-Trader.com, and we'll talk to you soon. Thanks.